Welcome to this very special session, the World Economic Outlook, by Mr. Louis E. Breuer, Resident Representative, the International Monetary Fund. This is going to be a very interesting session on the global economic scenario. And on behalf of the MCCI, it is my pleasure to welcome Mr. Breuer, who, as I mentioned, is the Senior Resident Representative for India, Nepal, and Bhutan at the IMF. Earlier, he has been the Division Chief of the ASEAN 4 Division at the Asia and the Pacific Department of the IMF, and has the experience of working on a number of other countries like Colombia, Korea, Thailand, Peru, and was Central Banking Advisor in Bolivia. Mr. Breuer holds a PhD in economics from the University of Illinois and continues his association with his alma mater as a visiting professor. Friends, the topic of today's session is the World Economic Outlook, which is based on the annual review of the global economy by IMF by the same name. The COVID-19 pandemic has shaken up the world, and every country has their own story to tell. This is where a global overview like the one undertaken by the IMF helps us get a proper perspective of the global economy. The World Economic Outlook of October 2020 projected a long and difficult ascent in the wake of the pandemic crisis, projecting a contraction of 4.4%. The readings were an improvement over the June projections, mostly due to better than anticipated recovery of advanced economies. Global growth was projected at 5.2% in 2021, a little lower than in the June 2020 WEO update, reflecting the more moderate downturn projected for 2020. The positive narrative continues in the January projections, with the global economy now projected to grow 5.5% in 2021 and 4.2% in 2022. A revision of 0.3 percentage point in the growth rate reflects expectations of a vaccine-powered strengthening of activity later in the year. The contraction estimated of 2022 are now revised to 3.5%, an improvement of 0.9 percentage points over the October projections, reflecting stronger than expected momentum in the second half of 2020. While these revisions exude confidence and optimism, the core challenges recognized by the recent global outlook continue to be major concerns for all of us. The impact of the COVID-19-led crisis differs across countries, depending on the intensity of the pandemic, the relative healthcare infrastructure of each country, the different policy initiatives undertaken, etc. However, a commonality that reflects across each country is the uneven impact within each society, with the marginalized sections facing more acute challenges in terms of both livelihood and standard of living. The recovery will require a concerted effort by all countries that is well recognized in the January 2021 outlook that suggests strong multilateral cooperation is required to bring the pandemic under control everywhere. There is greater need for international cooperation today, not only in terms of access to vaccine and its distribution, but also for other economic resources like access to capital, sovereign debt management, and international credit access. These are areas the agencies like IMF have a big role to play in the coming days to foster international cooperation for a collective recovery growth. Friends, with these words, may I now invite Mr. Breuer to elucidate these matters further and help us understand the expected trajectory of the global economy in the coming days. Thank you, sir, for joining us, and we look forward to hearing you speak. So you are muted.
Thank you very much, Mr. Kotari, for that introduction and for setting the scene of what I'm going to talk about, maybe for about 25 minutes or so. The IMF, the International Monetary Fund, tracks the global economy and produces a document called the World Economic Outlook twice a year, in April and October, and in January, it came out with an update. In other words, what did the data of December of last year and earlier months tell us about the health of the global economy? And so that's what I want to summarize, what that picture was from the data gathered in late 2020 and first few weeks of 2021. And as everybody knows, 2020 was the year of a major public health crisis, a pandemic, global in nature, which soon mutated into an economic crisis. What we've seen in the second half of last year is a return of economic recovery as the lockdowns were lifted across the globe, and especially in the manufacturing sector. Production came back much faster than was initially expected. So this led to a revision of the growth projections for last year and this year. Now that bounce back that started in the second half of last year has been unequal and divergent, both within countries and between countries. And I'll talk a little bit about that. Obviously, as you know, India was hard hit by COVID and had a very strong lockdown. So the gross domestic product shrunk quite a bit in the first calendar and second calendar quarters of last year, no? But also recovered quite strongly in the second half of last year. So it was hit hard, but it is bouncing back. Oh, shoot, I think I better, okay. Basically, right now, in recent weeks, there's been good news on the public health front with lower global cases after increasing cases until relatively recently, lowered fatalities, and a number of vaccines approved by different health institutes. And here we get a sense of the economic contraction of the great financial lockdown. And we compare it to the global financial crisis, which is the red line, which you may recall in the first quarter of 2009 led to a synchronized global slowdown that got very people concerned in 2009. Well, the growth impact of COVID due to the great lockdown has been very strong both in advanced countries, the blue line, and emerging economies, the dotted, much higher in intensity than previous crises, but also the bounce back has been quite strong. Part of this is because of the large support that countries have given to their economies, including income support measures in the first quarter of the year, and they've been maintained pretty much ever since. Also, through regulatory changes, there's been policy support in terms of the muted response of firms' bankruptcies, unlike previous, and you can see this in the blue line, a fall in the number of bankruptcies, whereas in previous recessions, you have seen an increase. Now, trade, coming with the recovery in the manufacturing sector, global trade is expected to continue to recover even faster than during the global financial crisis. Remittances have also continued to hold after a strong period of recovery, and financial conditions, international financial conditions are benign for emerging markets. And the support of monetary policy that one sees pretty much across the globe is expected to continue given that inflation is under control in most of the world. Now, despite this improved economic bounce back, global labor market conditions remain weak across the planet, with employment well below the pre-pandemic level, as seen in the left-hand chart. Countries with more flexible labor markets like the US and Canada reach a deeper trough earlier, but also recovered swiftly afterwards. Labor force participation also remains low compared to previous crises, which you can see in the right-hand chart. Now, the wheel assumes a number of things as the most likely scenario, and based on that produces projections. And obviously, if the assumptions are wrong, then the projections can be incorrect. But just in the spirit of understanding what's behind the numbers, some of the key assumptions are that it is possible to have new lockdowns because of resurgence of infections, and we've seen that at the local level in many countries. Broad vaccine availability in advanced countries and some EMs by this summer, but for the whole world by end 2022. Benign financial conditions, additional fiscal support in some countries, especially advanced countries, and oil prices that would increase on average by 20% this year compared to 2020. So based on these assumptions, this is what we see with global growth. First, looking at the advanced countries, well, after an estimated contraction of 3.5% in 2020, the global economy is expected to rebound to 5.5% and 4.2% in 21 and 22. This year's forecast has been revised up compared to what the fund projected in October because of additional policy support in a few large economies and expectations of a vaccine-powered strengthening of activity later in 2021. The US forecast is revised up quite a bit, 2 percentage points relative to October. Because of strong momentum in the second half of last year and additional fiscal support announced in December. This does not include the January fiscal support that the Americans are currently under discussion, but has not been approved yet. When we look at the emerging markets, we see India, starting with your country, that GDP is estimated to have contracted by 8% in 2020 and to expand by 11.5% this year from a very low base. This is a bounce back. So India's growth forecast has been revised up quite a bit in 21 and 22, reflecting stronger than expected recovery after the lockdowns were eased and as economic activity adapted to lower mobility better than anticipated. Looking at China, the outlook remains strong. Effective containment measures, a strong public investment response, and central bank liquidity support have facilitated a strong recovery in China. Now, these will be very divergent recoveries, and you can see even in the numbers, it's going to be 10.5%. That's projected for this year. And the Americans will depend on many things, one of which obviously is how bad the economies were by COVID. And it varies across the globe. Emerging markets in Asia, except for China, Latin America, Sub-Saharan Africa, start to continue to have GDP positive to the pre-COVID project level in late 2022. So the recovery is going to take more time in some countries than in others. And even within countries, the impact has been divergent. It's hit both in advanced and emerging and developing countries low-skilled and young people much harder than other groups. There's also a divergent situation in terms of vaccination. And this obviously depends on the supply, demand, and the country's ability to get these vaccines out to people. And I agree that this is an area that would benefit significantly from greater international cooperation and coordination, because the current situation is that you have some groups of countries that are overcovered in terms of the agreements they have with vaccines, and many countries that have been under covered and have not been able to yet find vaccines. In terms of demand, there was a survey in late December across 15 countries, and between 40 and 80% of the population said they would be willing to take a vaccine. And in terms of the countries that have actually vaccinated, except for Israel and UAE, the rest of the countries, as of late January, and this has changed, had a relatively small percentage of the population vaccinated. Now, there are also some structural characteristics of countries that will affect how they recover. For example, oil exporters countries were particularly hard hit by COVID, and service dependent countries, like countries that have a large tourism sector, because these sectors have been hurt quite a bit. Recoveries will also diverge because of the various level of income support that countries can provide, and the extent and duration of school closures that are expected to have a negative effect on human capital and social indicators. And of course, there has been different levels of policy support, including fiscal support. And here you have that advanced countries have granted much bigger fiscal support to their economies than emerging and low-income countries. And in this area, India stands out as one of the emerging countries that has supported most the economy, mainly through off-balance sheet operations of the public sector, through loan guarantees and that sort of thing. So in summary, this has been a very big shock, which has had a divergent impact on countries. Something that started as a public health became an economic, and now we're seeing this rebound from a very low level of production, which was the second quarter of the first quarter, calendar quarter of last year. Again, India was hit very hard, but it's clearly on its way back, and that's very good news. So thank you very much. That was in a nutshell the presentation I wanted to give, and I'm very open to any questions that you might have.
Thank you, sir. That was really good. And before we go to the questions, I would like to introduce you to our co-chairman, who's just, I think he just joined us, Sanjay Rasevasiya. He is the chairman of our Banking and Financial Services Council, and a keen person. So, sir, before we open this up to questions which we have received from the social media, I want to start the first question myself, which is, what do you think would be the role of IMF in recovering the economy, especially in this South Asian countries, in this new normal that we are facing, specific to South Asian economies?
Well, basically, as you may know, the IMF does three things. It lends money to countries that are in financial stress. It provides technical cooperation on very specific things like how to collect GST or how to regulate banks. And it trains officials from all over the world in macro issues. And the fund is very active in South Asia. In terms of financing, the fund has extended emergency financing that is unconditioned to a number of countries, including Nepal and others in South Asia. Of course, India is not doesn't borrow money from the fund. It's more of has a more of a creditor position. So we have done some financing, and across the world, the fund has given a lot of financing in the last year. And we also have a fluid conversation with countries, sharing what's happening in the rest of the world. And in fact, the IMF is tracking all of the economies of the world. So it becomes a bit of a hub of information that countries discuss in these annual consultations about how other countries are reacting to COVID. So it's been a very busy time the last few months.
I'll just, we have some questions from social media. I will just read them out for you. The first question I have is, what are the key factors for the economies to bounce back in this region? I don't know. I think when they say this region, I suppose it would be Southeast Asia again.
I think that news has improved in recent months, but we're not out of the water yet. So I think it's important for countries not to pull back the support of the economy too soon, because there are still the labor markets, service sectors, there are sections of the economy that are still doing quite not very well. And so I think the support needs to be maintained. Obviously, what one wants to sustain the recovery is for private investment and credit growth to resume. So the government has announced a bunch of measures on in these areas, including on the financial sector. So that is something that one would like to see jump-started by an expansionary fiscal policy that correctly targets health spending and infrastructure, and does so in a much more transparent way, because a number of things that were off budget have now in this current budget been included. So I think that this has been a positive reaction to the current situation. So not taking back the support too soon, I think, is important, and to prioritize those areas that are really important now, which is basically health and public investment. And in public investment, the fund sees a good opportunity to increase the generation of green energy. So in that context, also address some of the issues of climate change by increasing the percentage of renewable energy. So that's the broad policy recommendations that we're conveying.
Rishabh, I want to ask a question. Can I go ahead?
Yeah, please, sir.
Yeah, Mr. Lewis, can global trading losses due to currency exchange for low value currency be compensated by purchasing IMF term policy bond?
I'm sorry, I'm not sure I understood the question. You're talking about the effects?
Global trading, yeah, global trading losses due to currency exchange.
I think what he's asking is, especially for low value currencies, if they have global trading.
Compensated by purchasing IMF term policy bond.
IMF bonds.
Yeah.
Yes.
Now, IMF usually works with governments, doesn't issue bonds in the market. It has its own source of funding, but maybe with the World Bank or the Asian Development Bank, which they do tap the private markets, not the IMF. IMF deals with central banks mostly, or finance ministries.
Okay.
Sure, sir. So we have with us our council chair for youth, Vidhan. I know he wanted to ask a question. Vidhan, can you come in? So before Vidhan comes in, I think he has some connectivity issue. I'll just Vedant, are you there? I think he has some connectivity issues. So before he comes in, I have another question in social media. I'll just pick up. This is how how can monetary policy support fiscal measures to sustain business operations and support the health and stability of the financial sector of SAARC countries? I'm not sure if you should I repeat the question, sir? How does the monetary policy support fiscal measures to sustain business operations and support the health and stability of the financial sector of SAARC countries? It's a question we got in social media.
I think there's a big diversity of countries in SAARC. You know, you have Bhutan, you have India, you have Afghanistan, you have Pakistan, you have others. So it's hard to generalize a one size fits all, but certainly monetary policy, in our view, should be focused on, normal times on controlling inflation. And by keeping inflation low over many years contributes to financial stability and health of the financial sector, which in turn can lead to greater lending to the private firms. Now, obviously, under the current situation, many countries have adopted very lax monetary policies because we're not living under normal times. But inflation remains low, so that level of support is appropriate given the current conditions. No?
Thank you. Another question from social media is, what would have to change in contemporary developed and indebted economies to start reducing their public debts?
I think that the growth impact of COVID, which has been, as you saw, very negative, has worsened the debt problem of many countries because, on the one hand, the economic contraction reduced tax collections, sometimes quite dramatically. And at the same time, it increased the demand for government spending, including to support the vulnerable groups, the health sector, and so forth. So the deficit widened, the debt widened. So it's important for countries to keep an eye on medium-term fiscal soundness, sustainability, and to do whatever they can to stimulate growth, because with growth will come tax collections and lower demand for exceptional spending, and therefore gradual return to a more normal fiscal outcome. So many countries that are realizing that in the short run their debt situation will improve are also preparing their medium-term fiscal plans, which are basically considerations of what is it that is needed to bring back public finances to a level of deficit that is sustainable over many, many years. Now, India has, in the case of India, managed this crisis in a fiscally prudent way. And we do think that the additional spending in the current budget is a good thing because it's on health, it's on infrastructure, and these are good things for growth, no? But again, like many other countries, it's important to put this in a medium-term context and say, okay, this is what we're doing this year, but over the next 5 years, this is the direction that we're heading in, and this is how we'll do it. these are the concrete actions that will take us to where we want to go.
Interesting. I don't think Vidhan is there, so I have just one last question from Facebook. Then I will hand it over to Sanjay, which is, what is the current trend of structural change in developing countries? Where is this trend headed structurally?
Well, there are many ways to look at that question, but if the angle that I think is used is sort of what's happening to the different sectors of the economy, agriculture versus industry versus services, and what's happening with employment. What we do see in India and many, many other countries is a rural to urban migration, young people going to live in the cities. And this is happening fairly rapidly in some countries because education's there, because that's where the action is, because that's where the jobs are, the health services and so forth. People migrate to the cities. And young people don't like agriculture maybe as much as their parents all over the world. So you're seeing a reduction in agriculture and employment gradually, and an increase in services, especially, and sometimes manufacturing. The countries that have succeeded in reducing their economic divergence from, say, the advanced countries, the Southeast Asia, Korea, and what they accomplished is a reallocation of labor from a low productivity agricultural sector to higher productivity industry and manufacturing, and then services. And that was sort of the structural reflection of their development process. Now, it doesn't mean that everybody has to go through that same process, but many countries have gone through it, and India is going through it. The challenge is to generate dynamic sectors that are higher productivity, therefore can pay higher wages and better jobs for people in a sustainable way. And that's where private investment should play an important role, because it is really the private sector that's in the cutting edge of technology, adopting new technology, and they are the ones creating these jobs that are more better paying for the workers. No?
Thank you, sir. That was really illuminating, and thank you for sharing your views. Personally, this was very insightful. Thank you very much. And now I will hand over the baton to Mr. Sanjay Rasivasya to formally propose a vote of thanks.
Thank you, Rishabh. After a very engaging and enlightful discussion on world economic outlook, I take this opportunity to wholeheartedly thank our guest, Mr. Louis E. Breuer, Senior Resident Representative of India, Nepal, and Bhutan, IMF, for gracing this webinar and enlightening us on the core issue regarding the world economy. We are grateful to you, sir, for shedding light on the improving prospects of world economy. I sincerely thank all the representatives of the press and electronic media for their kind presence and continued support to us. With these few words, I express my heartfelt thanks to the members of our chambers, friends and business associates for their gracious presence of this session, and request you all to carry with this recommendation. Thank you.
Thank you, sir. And have a great day. I think it's morning for you, so have a
Thank you very much. Hope everything continues go better in Calcutta.
Yes, and I hope to meet you we hope you'll be able to grace our chamber once you are back in India, hopefully sometime soon.
That would be nice. Thank you.
Thank you.
Thank you.